if we can provide a viable alternative to a fiduciary, let's say they're managing client funds or their company's treasury, or they're just a high net worth individual, and they're like, all right, I can go use that custodian where I hand over all my keys and it's sitting in a pool commingled with other customers' funds, and it's this massive honeypot and it's uninsured. Or I can pay, maybe slightly more, not a huge amount more, and be able to hold keys, protect myself even against the custodian, but get the help of the custodian at the same time. So get the best of the both worlds, get inheritance support or resiliency in case the leaders of a company die, and it's insured. I don't know, as a fiduciary over time, how you would still choose the former.
Hi, Becca. How are you?
Hi, how are you? Thanks for having me.
Thanks for joining the show. Can you please introduce yourself to our audience?
Sure. My name is Becca Rubenfeld. I'm the co-founder and COO of a company called AnchorWatch, and we provide custody technology for Bitcoin as well as fully backed insurance backed by Lloyd's of London.
Custody is a very interesting topic. I'm looking forward to having this discussion about it with you. But before going there, I would like to perhaps know your own personal Bitcoin journey before starting this company.
Yeah, sure. So I first got exposed to Bitcoin just in 2019. So not too long ago. I had been trading at that point, so I really didn't know what I had, and I was just swing trading it. I thought I was doing okay. It was pretty range bound at that time, so I was, just farming, if you will. And as happens, there was I think a week in 2019 when the price went up 40% or something over the course of just a couple of days and never came back down. And I was out of the trade with maybe 2/3 of my holdings at that
Oh.
time. So, that happens. I didn't think too much about it. But then just a few months later, COVID had started. We were in lockdown, and there was an app called Clubhouse that had a moment in the sun, we'll say. And so I popped into this app, and it was this audio app, and there were Bitcoin rooms. There wasn't too much going on, but there were these Bitcoin rooms. So I thought I would pop in and maybe get some trading alpha, find out when I would have another entry point, when the price was going to drop. But what I actually found when I went in the rooms was all these amazing Bitcoiners in there conversing about all aspects of Bitcoin. So the first thing that I realized was that this group of people were just incredibly intelligent. It was very obvious from the conversation. I didn't know who they were, but as it turns out, they were CEOs of Bitcoin companies, they were core devs, they were miners and energy guys. They were OGs who had been around from the very beginning. They were cultural icons who are still very active on Bitcoin Twitter, things like that. And I just found the topic fascinating. So eventually I ended up in the position where I was able to ask my own questions. And I ended up just having this amazing opportunity that it would never have happened if not for the quarantine, because there was the 6 or 8 months where all these guys were sitting in there for 12 hours a day, just sharing their knowledge. That everybody was stuck at home. And so I had the opportunity to ask questions and be like, well, why does this happen? Why does that happen? And they would explain the design of Bitcoin, or the history of money, and how the government works and how mining works, and mining economics. And I could ask my own questions, my own follow up. I didn't have to dive into forums. I didn't have to read books at that time. I've certainly read them since, but it was just an amazing opportunity that I got this enormous amount of knowledge in a really short amount of time, delivered directly to me, to my own questions. So I got orange pilled really quickly. Totally changed my life.
Yeah, I think you raise an interesting point about Bitcoiners being very smart. I tend to agree with you,
Yeah.
but from the outside world, they look at us as lunatics, anarchists or like
A little
freedom
bit.
fighters, so there's a mix, of
But
data.
maybe that's people who aren't very smart looking in, right? And just judging. I mean, I think Bitcoiners kind of by nature are a little defiant and oppositional by nature and kind of always gearing up to take the opposing opinion. But to me, that's a sign of intelligence and really having the ability to think outside of what you're being told to think. And yeah, it was very clear to me that there was an enormous amount of intelligence in this group of people.
Yeah, but this led me personally, like when I started, like when I understood and like I was orange pilled, my first reflex was about sharing my knowledge. But
Hmm.
at the same time, I realized that I shouldn't push it, So because you end up like so much seeing the world completely differently than others do that you cannot stay silent. So I find it like the hardest part of being a Bitcoiner and knowing how the world functions is to wait for the questions instead of like pushing all these stories
True.
to people.
True. I mean, another benefit of kind of coming into the industry, if you will, through this app and through this group of people, is I ended up finding a real world group of friends, of like minded friends who really all understand as well. So I think naturally, actually, my social circle and those who I spend a lot of time with actually transitioned as well. In addition to changing my whole career towards Bitcoin, really my social life as well. So
What were
outside,
you doing before
yeah.
Bitcoin?
So I worked in big corporate America. I spent the last 10 years before we started AnchorWatch at the Starbucks headquarters. And I did different things. I ran a large fintech program for the last several years. I did product development. I launched for several years. I was almost in a startup type environment within the big company where we were launching concept stores and tests and doing all sorts of really cool projects, which was an amazing experience. So I had a great time, honestly. I had what I think is a really successful career leading into this, but the opportunity came, and I was passionate about Bitcoin and what I think it can do for the world and do for individuals. So when the opportunity presented, I jumped.
Good, good. And so how did you switch from like a day trader to building, and why custody? Like how? What's the Anchor Watch story?
Yeah. Well, honestly, that's a Clubhouse story too, which is funny. So my co-founder, the CEO of AnchorWatch, is Rob Hamilton. He's been in Bitcoin since 2013. He learned to code just because of his passion for Bitcoin, and he was on Clubhouse with the rest of these guys. And he while not well known at the time, just when he spoke, he was again just clearly incredibly intelligent. He was kind of this sleeper expert who, when he spoke up, he had these amazing insights on Bitcoin and how it worked. So I was always very impressed by him. And one night we were sitting on the app, a large group of people, and just chit chatting. And somebody was talking about how a lot of companies in Bitcoin, might be a little frivolous, may not need to exist for Bitcoin to be successful. But he pointed out that insurance really does. Every mature asset class has a robust insurance market. And this is a bearer asset, right? So if you lose it, it's gone forever. And therefore, insurance makes perfect sense for it. And so insurance was identified as being something that was lacking if Bitcoin was going to continue to mature and gain adoption. And so that was the conversation. And Rob was thinking about it and thinking about how, if you were going to do insurance on custody, how exactly would you do that? And we started from an idea of self custody. And how would you prove that somebody has the Bitcoin that you want to insure? And so he was thinking through that and realized he knew how he would build it. So he decided how he would approach it. And then the other guys who were on the app with us, who again were just really impressive people in their own right, had started their own companies, were angel investors, were very knowledgeable, and they told Rob, Rob, why don't you just do it? Why don't you build it? We'll back you. And so all of a sudden the company was born. And I actually first invested. So in those first few days, I threw money in to back Rob and this idea of insurance, and ended up just helping him out just with his, with the early work, getting a pitch deck together and building pro formas and things like that. Some of the business side of starting a company, mostly because we were friends and I had invested. But really quickly, I mean, I was having a blast. Rob and I were working really well together. So within a week or so, we talked and talked about my leaving Starbucks and joining full time as his co-founder. And it's just one of those situations. This was an amazing opportunity. The business was necessary in the space. It would add value to the space. We had investors lined up already. Amazing opportunity. So I made the decision, within minutes, and
Okay.
made the
Wow.
switch.
I remember watching the headline back then, and then what's the business model? So pitch it for someone who doesn't know you.
Yeah, so AnchorWatch first and foremost is a provider of insurance. So, like I said, we're a Lloyd's of London cover holder, and we have an insurance policy that we offer. But specifically at the time, for the time being, we offer insured custody when you use our custody tech. So we've built our own multi-sig coordinator. It's called Trident, but it's a little different from any other cold storage wallet that's out there. So, of course, people are familiar with single sig custody for self custody. There's multi sig, for example, a two of three. But what we built,
Hold on, just to break it down. So
sure,
single custody is like when you're holding your own coins and you have the password to your cold wallet, basically.
right. So you have one of the signing devices. I always have a bunch lying around, right? So different makers, and you can store the private keys to your Bitcoin on one of these
Yourself.
devices.
And then you have multi signatures. So multi sig is like when you need two or three per people or two out of three
That's right. So
sign the transaction. So
yeah, so that's where you would store that private key information on three devices, and any two of those devices can spend the Bitcoin. That creates some resiliency. So different companies have popped up over the years, providing, I think, great service to the industry and to Bitcoin owners, and helping them custody. So, for example, companies will exist that if you have a multi-sig, two of three, they'll hold one of them as a backup key. So you still hold two, but if something happens, they have a third. Of course, there's sole custodians, right, who hold all the keys, and you actually hand them your Bitcoin, and you're trusting them to hold it. And so, you know, there are reputable companies, there are unreputable companies, but at the end of the day, they're a tech provider. They're providing the tech infrastructure to keep that very important piece of private data. But it's across the industry, it's effectively uninsured. So they're charging you most typically as a percent of the value of your Bitcoin to hold on to this tiny piece of data. Mostly, I think, because we feel the data is very important. So instead of charging based on the size of the data, they're charging based on the value of the data. But at the end of the day, if you use one of these providers, you are an unsecured creditor. So what that means, if the company goes bankrupt, if they have some sort of flaw in their security, and they lose the customer's Bitcoin, there's really very little recourse for those customers. So we approached it a little bit differently, both on the tech side and by providing insurance. So on the tech side, we use Bitcoin native technology called Miniscript. So this isn't AnchorWatch technology. This is part of Bitcoin scripting language. It's out there, and everything that we do can be verified on chain. So you don't actually have to trust us when what we describe in what we describe. So how our custody is different is two main things. One is you can create different spending rules, and you're actually allowed to combine wallets and multisigs for more robust storage. So, for example, if we're talking a institutional holder of Bitcoin, large funds. What we're trying to do is actually mimic traditional corporate governance and compliance, but actually encode those rules onto the Bitcoin blockchain. So, for example, what we can do is we can take one of those two of three multisigs, and you could have a CEO, a CLO, and a CFO hold those three keys. And AnchorWatch has our own key set. And so instead of the smart contract, the spending rule being if two of three spend the Bitcoin, that would be a normal multisig. We can go a step farther and we can say if two of three, the customer keys, and
Mm.
if AnchorWatch keys. And the Bitcoin can only move if both of these companies come together to spend the Bitcoin. So what we're doing is we're doing kind of corporate style spending authority, but using the cryptography native to Bitcoin. The other thing that we have are time locks. So time locks in Bitcoin mean that after a certain amount of time has passed, additional ways to spend the Bitcoin can become available. So that could be something like, oh, it started with a two of three, but over time, it becomes a one of three. So that would be a very simple use of it. But what AnchorWatch does is we have additional layers of security that really create recovery options. So even if something drastic happens, the customer loses keys, at the same time that there's a tornado where other keys are stored, or what happens if AnchorWatch ceases to exist? What happens if we get wiped off on the?
Yeah, that's what my first question would have been. Yeah.
Yep. So with time locks, we can say, look, under normal conditions, absolute highest security for our customers, the customers must sign with their own multisig and Anchor Watch must sign. And then we have some time locks that say, like, if some wallets are missing, stolen, damaged, whatever it may be, we have some contingencies. Like further down the road, though, we have recovery layers with outside institutions.
Ah.
So we have a partnership with Coin Corner. They're out of the EU, based in the Isle of Man. So we chose a multi-jurisdictional partner. And they can come in after time and say, look, if the customer lost all of their keys, if there was a violent, a kidnapping, a wrench attack, and they had their keys stolen, or some other way they were damaged, or if we're talking about an individual customer, if they've died during the policy, then AnchorWatch and Coin Corner can come together and move the Bitcoin to a safe location and recover it. So, in the retail example, in the individual example, if you died and your spouse did not have your keys, and this is a big benefit here, they don't have to have your keys anymore. So they don't know where those signing devices are, or they don't know how to control them. They don't have the PIN. With our system, we can say, that's okay. Let's wait till the time lock opens. Let's say the time lock opens for the recovery layer, let's say on June 15th. So go take care of your family for a few months. And on June 15th, we will set you up a brand new vault, and AnchorWatch will call in Coin Corner. And at that point, we together can move the Bitcoin to a new safe location and we can take care of you. And so ultimately, it's incredibly robust. And then our vault actually finishes out as totally sovereign. So when your insurance policy ends, and I'll come to the insurance itself in a moment, when the insurance policy ends, it's actually controlled only by the customer keys. So while AnchorWatch has liability for the customer, we're a required signer because we can provide additional governance and compliance. But if you don't want to be our customer anymore, you don't actually have to ask us to get access to your Bitcoin anymore. It actually just becomes fully sovereign because of the time locks.
The
So
time.
even if we've again disappeared or we're bad actors or anything like that, it becomes a fully sovereign vault at the end of the day. And if everything is great and you're happy being our customer, then actually once a year, when it's time to renew your insurance policy, we're also going to renew the vault. We come together and we sign a transaction with those signing devices, which effectively restarts the clock on the
Restarts
vault.
the clock, actually. Yeah,
Exactly.
I had heard about time clock, but I didn't know it was taken to such extent. Actually,
they're
I heard
really
about
cool.
it just from a perspective of me forcing myself of not selling my Bitcoin. So I put like a time clock on it, so I cannot access them for the next 5 years. So I'm sure
Yeah,
I'm
I
bottling
mean,
them.
you could use them for that. The cool thing about time locks and mini script in general is it is totally composable. So you're really just stringing together if then statements. So if 6 months have
Yeah.
passed and the CEO and the CFO and AnchorWatch sign, then spend the Bitcoin. And then another rule: if 12 months have passed and this, that,
Yeah.
and
So
another, then
basically, the miniscript layer, you took it to the extreme, basically, where you took all the options possible, and you were, but how, but that. So basically, by adding all these conditions, then it makes it perhaps easier, and we can switch to the insurance part, to the
yeah,
insurer, to
you
feel
got
confident insuring those funds, basically, right?
it. Exactly right. So we used Miniscript and the tech to protect the customer using the tech for every scenario we could think of. So, people will ask us, what happens if this? What happens with that? And we're like, yep. In that case, we would wait for this time lock and then, we could solve the problem. But there's a few things that actually the tech just can't really protect against. For example, a violent kidnapping. You put a gun to somebody's head or somebody's children, and they will hand over even the best thought out security plan, right? So there are things like that. The tech itself can't actually protect against AnchorWatch committing collusion, right? So uh, we made sure that our insurance policies actually cover the things that the tech can't cover. So
Uh-huh.
so our policies cover wrench attacks. They cover fraud that includes AnchorWatch because the insurance is backed by Lloyd's of London, oldest insurer in the world, most respected. So to your question though, was it because of the tech that we were able to get the insurance? And the answer is kind of yes. So when we went to Lloyd's and we described what we were trying to do out there in the marketplace, there are insurance policies. So the big custodians, BitGo, Coinbase, they have insurance policies, but they're in the range of a few hundred million, two, three, $100 million insurance policies. But they have anywhere from 75 billion of customer funds up to 500 billion and 200 million of insurance,
Okay.
right? So it's fractions of a penny on a dollar. And why is that? It's because the underwriters say, look, we're willing to give you an insurance policy, we'll give you a big one, but we're only willing to write so much insurance for any one customer, because if you're compromised, the loss could be enormous for us. And when we described AnchorWatch and our Trident Vault and Miniscript, and we were able to show that we're different because the customer still holds a key. So what that means is if you and I were protecting your vault. So if you were an AnchorWatch customer, your vault would have you as a required signer, your company as a required signer, as well as AnchorWatch. Meanwhile, if Tom down the road also has an AnchorWatch policy, and same deal, he's holding keys, he's a required signer as well as AnchorWatch with the recovery layers. Even if somehow your vault was compromised and you lost Bitcoin, you were kidnapped, and the thieves got away with your Bitcoin. That actually has no bearing on Tom's vault. And so, because of that, we were able to show the insurance industry really that we're able to, using cryptography, using Bitcoin's tech, that we are able to distribute risk across the customer base in a way that made them feel comfortable letting us write really large policies. So for any given customer, we can write a policy today up to $100 million for one customer, whereas these huge custodians have policies of 2 to 400 million for their entire customer base. They all share the same policy, and if there's a loss, they all are just getting a fraction of their holdings back. Whereas with our customers, you can get up to one-to-one coverage. So if you have 25 million of Bitcoin, you can have a $25 million insurance policy. It's a complete game changer. It's very different, and it is because of the tech.
Okay, wow, that's quite unique in this space because I have interviewed a lot of custodians on the show, and none of them have this kind of like 100% coverage on every customer. But but talking about like the insurance, like when you
Mm-hmm.
tell me like you went to Lloyd's and you explained to them that you are like better than the others and all this tech, I mean, from my experience, and you must have lived the same thing, is when we went to, because we have a Bitcoin equities ETF, so we have a
Uh-huh.
fund
Yep.
that holds listed companies, and we
Okay.
were looking for a custodian of these companies, like a stock custodian, which is like the most basic thing that existed
Mm-hmm.
for ages. But because there was the word Bitcoin in our fund,
Yeah.
nobody wanted to touch it. No, Bitcoin, we don't do
Yeah.
crypto. There's no crypto. Yeah, but no, but yes, and we couldn't, like, it was a really, really hard struggle to find this equity custodian. So you must have struggled. What was like the path to talking to these insurers, because they're like they jump to the roof. They hear about like
Yeah.
all of these hacks, theft, losses, etc. in the Bitcoin space that occupy a lot of the media attention too. So when you come as a founder to meet these insurers, how are you able to convince them? Basically, perhaps through charms.
Uh, I like to think I'm very charming, so we'll take the credit for that. But no, with a lot of education. So I mean, first of all, we should have started with Lloyd's. Lloyd's has the reputation of being open to exploring insuring on unique things, and so we probably wasted some time going out to more traditional insurers. And I have to say, they were interested. So they were intellectually interested in hearing what we were doing. They were not dismissive, like you might expect. Insurance is really investment banking by another name, right? They have capital. They're choosing who to invest it in effectively,
Mm.
what risk to invest it in. Um, and so, they were interested. They see the market cap of Bitcoin going up, but at the end of the day, they weren't ready to actually allocate their capital. So we found our way over to Lloyd's, which is certainly where we should have started because one, Lloyd's actually has experience. The existing policies that are out there, by and large, are Lloyd's of London policies. And so we were not starting from zero, first of all, in terms of the tech. And yeah, to give our underwriters credit, we just found them intellectually curious and ready to hear us. So at the beginning, we have an analogy that we like to use. We hone this ourselves over many pitches of trying to explain Bitcoin custody to non-Bitcoiners. And so we use the analogy of walking into a post office. And I don't know if it's the same in France and in Europe, but in the post offices here, if you walk in, there are PO boxes where you can buy a private PO box. So you walk into the post office, there's a wall of PO boxes. And so I picture walking in there. The only difference in our analogy is that instead of an opaque metal door, picture a clear door, like thick glass or plexiglass. So everybody can see what's inside the PO box. And maybe there's a mail slot and anybody can put mail into the PO box, but only the person with a private key can put that key in the door, open it, and take something out. Right. And so this wall of PO boxes is pretty much the Bitcoin blockchain. Right. And so when a customer buys Bitcoin on an exchange, they put it and take it into custody. Really, that Bitcoin is going into one of those PO boxes. And what we did is we demonstrated that, look, we're not just insuring Bitcoin, this idea. What we're actually insuring is the Bitcoin in this specific PO box. So in Bitcoin tech terms, we're talking about a specific UTXO, a specific location. And so what we kind of went through was more or less that we can prove that the customers have the Bitcoin. We can prove that it can't move without signatures because it's a public blockchain. We went through the mini script and did the game theory explaining all the ways somebody could try to steal it or it could be lost, but how we had mitigated it. And really, we just showed them that this is actually not only can it be insured, it's actually very insurable. Because think about it, it's a public blockchain. So if it's stolen, we can trace it, right? We can keep following it forever and try to recover it. We can see it moving. It's a bearer asset. The keys can be held in an incredibly robust way. So when you think about it, from an insurer standpoint, it's actually more insurable than, say, fine art or jewelry or something that really can just disappear, be burned up in a fire easily. The technology of Bitcoin storage, Bitcoin custody, is actually incredibly robust, and they should be willing to insure it. So we were successful in that. So credit to our underwriters over at Lloyd's, and we'll give ourselves some credit too for walking that path. It took a long time. It took about a year from the time we started talking with Lloyd's until we became a Lloyd's of London cover holder.
Got it. Okay. And talking about custody and insurance, there is like a kind of doom scenario in my head, and I wanted to know your thoughts about it.
Yeah.
Of somebody hacking into Coinbase
Yep.
and stealing some of the coins.
Yep.
And then this whole ETF industry that have been pumping the Bitcoin price and all the institutional money would vanish overnight, basically.
I
And
I
nobody talks about it. I mean, do you think there's a risk or?
I think it's a massive risk. I think it's a systematic risk to Bitcoin, and that is one of the things that, as Bitcoin owners, we literally hope this product helps to mitigate that risk. So right now, all the ETFs, not all, what is it, 9 of the 11 American, I'm not sure on the European ones, but a huge concentration of the ETF Bitcoin is at one custodian, just one custodian. Uh, that's that's an incredible honeypot. You know what could happen eventually if there's a major loss eventually. It could be an inside job. It could be a person or a group of people who get jobs at these companies specifically to plan a long-term heist. They could spend 3 years or 5 years planning and circumventing all the internal controls. I'm not doubtful that the internal controls are robust. To be fair, like I'm very confident all
But
these.
it's like stealing Fort Knox, It's like
Yeah,
you can
it would be.
spend a lot of means just to control people, At the end, it's like maybe 10, 20 people, even 100. You have
Yeah,
like billions at stake.
exactly. So I mean, honestly, I think uninsured custody, like truly uninsured custody, is a little bit of a grift because you're, again, as I mentioned earlier, you're charging based on the value of the data you're storing. Because when you store that private key, it's just a bit of data, and so you're charging on the value rather than the size of the data. But if something goes wrong, there is no recourse. So to your point, you know I think it's worse than what you describe. I don't think it's just the institutional money would disappear if there was a major loss at one of these custodians. I mean, I think it would be an incredibly damaging event for Bitcoin as a whole. I think it would damage the individuals who don't use those custodians. I think the price would have, it would have a terrible price impact. It would really, really impact overall interest in the asset class.
But that's
So,
the thing is that we have lived that uh, in the past with SBF, and everybody was like criticizing these all these huge institutions that didn't do their due diligence before giving money to SBF.
Correct. Yeah. I
And
mean, look,
now you have all these big names like BlackRock and such just handing over their clients' money without doing the basic due diligence, which they have already on all their funds are insured. Like if they had like all BlackRock ETFs are insured, but somehow in the due diligence process, the insurance box was
that's right. Yeah, there's actually a disclaimer in the ETFs, as well as most corporate treasuries that hold Bitcoin on the balance sheet. They actually have
yeah,
a
there was a
disclaimer.
disclaimer in Madoff's fund too, like,
Right.
and
That's
in
right.
SBF, I'm sure there was a lot of
Well,
disclaimers.
I mean, look, I think like SBF was truly fraudulent, right? And so, I mean, there was perhaps a true lack of due diligence from a number of parties because it seems like there were a lot of red flags that could have been identified. And I'll point out if FTX had been using our custody technology, it would have been very, very hard to pull off that level of fraud, right?
Oh, sure.
It would have been very hard because
Yeah.
actually like there are eyes on the specific Bitcoin. It's not hidden in some omnibus account. It's actually there on chain. It can be verified and financial statements. And when they spend Bitcoin, an outside institution actually has to sign the transaction. So again, when I say that we're trying to create the mechanism for corporate governance and compliance, but at the protocol level, that's kind of what I mean. Like the insurance serves a purpose as a backstop, but the technology can be used to protect Bitcoin in a way that people are not taking advantage of.
Yeah,
Um,
and my only hope, like to get out of this situation or to find like a good exit where there's no time for these hackers or this malicious actors to try to find a way to steal these coins, is that the profound problem is that the insurance industry is still haven't realized completely the very low risk
yeah,
of insuring Bitcoin custody, because it's a very safe, especially with all what you have described. It's a very safe custody compared
right,
to a lot of insurance they do. Like I don't know, the jewels that are saved in your house box
right, right.
safe, they are you pay a lower premium on the amount of jewel you insured compared to Bitcoin, where you should be paying much less. And also, you have like so much less, so few insurers that are in this market. So
Yeah.
competition will come, and education will raise, and the insurance premium will drop to very low level. I think it should
I,
drop almost to zero, like the ETFs are priced.
well, so I mean, I don't think it can go to zero or almost zero for some years because there's a cost of capital. So Bitcoin is any insurance is actually backed by a pool of collateral that can't be
Yeah,
rehypothecated.
but like a car insurance or like a lot of items, like even less than a car insurance, it should like the premium should be
And
like
car insurance
one
is
of
one of
the lowest, compared to the
well,
risk
so
that you take.
I think maybe you'll be surprised then to find that our premium rates, even now, even early in the development of the industry, are actually incredibly well priced because of that. So, for example, you mentioned jewelry. So, a specie insurance policy for high end jewelry or for extremely high end fine art, bars of gold, physical gold held in custody, those premiums, depending on the specifics, can be from 2 all the way up to as much as 7% of the asset value a year. That's incredibly expensive. Even if we say at the low end, even if somebody comes up with an example, they're like, "Oh, I got it for 1.8%." Awesome, good, good. Our pricing starts at about 0.5%.
That's it.
Okay,
Ah,
that's right. Yeah. So the
oh wow!
specific
I thought it was like in the three.
Absolutely not. No, we really developed this trying to do a good quality, high quality insurance product that covers real risks, that actually provide, good product and good protection to customers, but is economically viable. When we talk about ETFs or others who choose to use uninsured custody, in their defense, up until I think AnchorWatch, there wasn't really high quality insurance at an affordable price on the marketplace. So you could say, like, look, we would love to have insurance. There just isn't good insurance available for us. And therefore we are stuck and we can't choose insured custody because it's simply not available. And we're really just trying to change the game on that. So we think we de-risk the whole industry, maybe $100 million at a time, but if we can provide a viable alternative to a fiduciary uh, who, let's say, they're managing client funds or their company's treasury, or they're just a high net worth individual, and they're like, all right, I can go use that custodian where I hand over all my keys and it's sitting in a pool commingled with other customers' funds, and it's this massive honeypot and it's uninsured, or I can pay, maybe slightly more, not a huge amount more, and be able to hold keys, protect myself even against the custodian, but get the help of the custodian at the same time. So get the best of the both worlds, get inheritance support or resiliency in case the leaders of a company die, and it's insured. I don't know as a fiduciary over time how you would still choose the former. I think we came on the market. The specific pricing for any given customer is, of course, going to depend on their specific risk factors. And we also have some options that they can do when creating their vault that are a balance of, say, flexibility versus security. And so we give some customers a range of options, all of which are safe, but some are kind of super ultra safe. And the more they opt towards the super ultra safe, the lower their premiums are going to be. And then the larger the policies, also, there's some discounting.
You know what we should do? We should launch a Bitcoin ETF in the
Okay.
US,
Okay.
custodied by AnchorWatch.
Let's do it. We're here for it.
Like it's a unique selling point. That's for sure. It doesn't. It's not out there. You know.
Yeah. We would love for some of the ETF volume to move over to AnchorWatch custody. I think,
No,
I
but
think the
let's launch
ETF.
one. I was looking to. We launched it in the Europe, but
Mhm.
in Europe you cannot have a Bitcoin ETF, so we had to go through a gimmick and launch a Bitcoin equities ETF.
Uh-huh.
But and in the US, I wasn't expecting it to be approved when it was approved. So now that I know that we can approve
Right.
and we can have a unique selling point, let's do it.
I'm super open to it. I really think.
Okay,
Uh,
I'll follow up with you on this one.
all right, we'll huddle afterwards. Yeah.
Great. Unfortunately, I have to wrap it up. Time is up. Thanks a lot for joining the show. It was a very, very interesting discussion. Nice to meet
Thank
you.
you.
And
Yeah, it was great to meet you. Thank you for having me.
so
Uh,
people who are interested in your solution, they go on your website. We're gonna share the link. Do they need to know to follow you? Where do you post, publish?
yep. Yep, yep. So I will call out now that as of today, we're serving customers, commercial and retail, but based in the United States.
Okay.
Uh, so, but we can insure, say, for example, LLCs out of the United States or any other commercial entity. Minimum policy size $250,000 up to $100 million per client. If customers are looking for more, reach out to me and we can work on a custom policy and try to put something together for them. Anchorwatch.com is our site. There's a contact form there. You can email me at becca@anchorwatch.com. And yeah, anybody who is interested, just reach out. We can give you some more information. And the process would be we talk and make sure that we're a good fit for what you're looking for. We would go through those options I described of flexibility through security, give them a rate quote. If they want to proceed, they would apply and we could